Hi, this is Mark Patterson with MHP Asset Management, bringing you an update in the markets and what's going on. So anyway, today is September 11th, 2020. 19 years ago today, we had a very sobering experience with the Twin Towers coming down, and I'm sure we all remember where we were at that time. I certainly do, and it doesn't seem like 19 years ago. I bet you we all kind of feel that way. But anyway, so 2020 has been quite the year in and of itself so far. We started out the year doing well, then comes March, and we have oil wars by the Saudis, Russia, driving the price of oil down to the point where there are tankers floating around out in the oceans full of oil looking for a place to put it. And so that did not help with then COVID coming in and shutting down this country. So we saw a tremendous amount of volatility and market corrections back in March. Well, since that point, we've had quite the recovery in the equity markets, and I think a lot of that has been due to the fact that interest rates are so low that people need a place to put money at this point, and they don't want to go into the bond market. A 10-year note, Treasury note, is roughly 70 basis points, 0.7% for a 10-year commitment. It's really not worth it, in my opinion. The thing is I'd rather keep that money liquid and use some option strategies like we've been doing in a lot of your accounts to create alpha and create income, also hedge the portfolio. So the other thing, we've got elections coming up in less than 2 months now. And some market strategists have thought that this coming period could potentially be one of the most volatile periods in the markets that we've seen. Now, saying that, a lot of times, if you can say that and think that, and then really nothing kind of happens. And if that's the case, that's fine. But I'd rather keep a lot of liquidity in the portfolios at this point and err on the side of caution, but use some option strategies to maybe create income and alpha, because when I do that, we don't have to commit that much money to the markets at any one time. So even if things do go really bad in the upcoming elections, and one of the things a point that I wanted to make, it's not necessarily who you vote for. What the markets don't like is uncertainty. So if we get into a position to where we don't really know who is the new president-elect, or if Trump continues his presidency, if we don't know that till, say, weeks, potentially months after the election, that's really going to roil the markets, because the markets do not like uncertainty. So that's my biggest fear with the upcoming elections, is that we just don't know who won for some period of time. So anyway, there again, interest rates very low. If you'll all notice that I'm not taking on new bond positions in the corporate bond market unless I find something exceptional out there. The risk versus reward is just not worth it to me right now. Average 4-year duration portfolio right now, we can maybe get 4%, but that's with BBB debt. In other words, that BBB debt can slide into junk status overnight, like we saw in March in some cases. Now, fortunately, a lot of that has come back, and I feel very fortunate that it has, but it won't always be that way. This economy still has a lot of rough patches to get through, and you can't necessarily link up to how the equity markets have reacted to the underlying economy. Because really, if you look at this market and the tear that we've been on in the NASDAQ, it's been led by companies like Apple and Tesla, who have had 4 or 5-for-1 splits. And those two have pulled back a bit since their initial run-up. But we don't know what's going to go what's going to happen with the markets going forward. A lot of stocks have not participated in the rally. They've they've just been sitting there basically doing a whole lot of nothing at this point, paying a dividend, which is fine. I don't mind owning some of those stocks. But some of those stocks that have run up, you might have seen that I've taken some profit. I've written some covered calls to take profit or take some money back out of those stocks to lower the basis for them. So anyway, it's just a very interesting market, and I know we've got time before the elections, but I can see that traders are starting to position themselves for some volatility coming up. So anyway, if you have any questions, please give me a shout on the phone or send me an email. I'd love to talk to you. It's good talking to you, and I will be back in touch in the very near future. It's been Mark Patterson with MHP Asset Management. Good to see you.